I get it. So the use of Fibonacci is not for what trade entry, but it's for us to identify where a valid POI is. I get it. It's used to identify where a valid point of interest is. It's not used for entry. All right. Basically, what most of retail traders and other smart money traders do is what, whenever they see a continuation market, they flip their Fibonacci from this low to this high, then they will be like, what, they'll guess, right, that price is going to what, reverse at what, either 61.80 or 78.60, or the golden zone, which is the 50 for them, right? So what they do is that what, they will place their limit order over there without knowing the exact place that price will be what will be reacting to, or will be giving us what, the reversal. I get it. So what they will do is what, they will place their entry over here on the 61.80, then their stop loss what, below the 78.60, in the sense that if price come to the 61, it will tap them in, or when price push further to the 78.60, it also what, tap them in. But you can see that what, the stop loss will be wider. I get it. It's almost what, 20 pip stop loss, right? And if you are targeting this previous high as your take profit, just imagine, right? You can just imagine the risk to what, 1:2, right? It's not a good risk to reward, right? So what we do as what, the advanced smart money traders is what, we use the Fibonacci to identify or to look for where what price is what is likely to reverse at. I get it, where there is orders line at, right? Whenever you want to buy something, you wouldn't like to buy it at a higher price, right? You always want to have a discount on that stock or item before what you cash on it or buy it, right? So it's the same thing that you apply to this market, right? Right. So what you do is what, we will start looking for what, we start looking for our point of interest within this discounted price, which is what, it can be either what, either an order block or an inefficiency, right? Or on a bigger time frame, it can be inefficiency. Then when you find it to the smaller time frame, you'll be able to identify what's another block within. So I call that OBEM, right? OBEM, where you have an inefficiency, right? Then that within that inefficiency, when you scale down to the smaller time frame, you see what's an order block within that zone, right? So you take that place, right, as your entry. Assuming, let's imagine you're having H4 inefficiency. You can imagine the stop loss level. I get in it. You can imagine the stop loss. It will be wide, right? And you wouldn't know where price will reverse at, right? That's why you need to do it, to always identify and refine that point of interest, right? You have to refine that higher time frame point of interest. All right. So the same thing happens to what, the premium market. Let's say you're having what, so you're having a sell, right? Price is selling. What you do is what, you use your Fibonacci from this previous what, high, lower high to your lower low, right? Then you are going to identify or look for your point of interest within this what, premium price, right? Within this premium price, which is between what, 78 and what 61.80 is your what is a premium price. So anything below here, you are not what interested. But anything what's above the equilibrium price is what you are what interested in, right? So I've explained within the H4, within your premium price is where you are always going to look forward for your continuation or your what your point of interest at, right? So let's say this your H4 structure, which